Today, we are diving deep into the 2025 new condominium market trends for Japan's Kinki region. And let me tell you, the numbers that just came out paint a really fascinating picture, and honestly, a pretty confusing one at first glance. Hello, this is Japanese Economic Review Channel. We're breaking down the latest official report, and wow, there is a serious puzzle right at the heart of it. So let's just get right into the thick of it. How on earth can a key price metric be smashing all-time records while another one just dropped for the first time in nearly a decade? What is actually going on here? Okay, first things first. Let's look at the big headline numbers. This is really where you start to see that contradiction I was talking about. It's pretty stark. And there it is. On one hand, the average price you'd pay for a new condo actually went down by 0.5%. But, and this is the crazy part, the price per square meter, which is a much better way to measure the actual value of the real estate, it jumped up by more than 5%. So how does that even work? Let's dig into that first number. The average price for a single unit was 53.28 million yen. Now, you have to understand, this is the first time in 8 long years that this number has gone down. It's a huge break from a trend we've seen for a very long time. But then you look at this. The price per square meter shot up to 953,000 yen. That's not just an increase. That is the 5th year in a row it has set a new record high. We're talking the highest it's ever been since they started tracking this way back in 1973. So by this measure, the market is absolutely on fire. So what gives? How do we make sense of this puzzle? Well, the answer isn't about the market as a whole. No, it all comes down to the kind of apartments being sold. This is really the core question we need to answer. How can the average apartment be cheaper when the land and materials they're built with are more expensive than they've ever been? And here we go. This is the answer. The number of new, larger condos, the ones for families, that supply went up by a pretty modest 2%. But look at the supply of smaller, investment-type properties. It absolutely exploded, jumping by almost 44%. This chart really puts it all into perspective. You see, prices for those family properties didn't fall at all. In fact, they went up by nearly 5%. So what happened is the market was just flooded with a massive wave of smaller and individually cheaper investment units. There were so many of them that they literally dragged the overall average price down, even while bigger homes were still getting more expensive. So there you have it. This wasn't a market crash or a price drop in the way we usually think about it. It was a huge shift in the product mix, what was actually for sale. And that boom in investment units, well, that's the whole secret to understanding these 2025 numbers. Okay, so puzzle solved. But that's just one part of the story, right? Let's zoom out a little and check some other vital signs to see how healthy the market really is. First up, let's look at the total number of condos sold. After 3 years straight of things slowing down, the market bounced back in a big way. Sales jumped by almost 12% to nearly 17,000 units. That's a really strong signal that activity is picking up again. And what about demand from buyers? Well, the first-month contract rate is a fantastic way to measure that. It hit 73.5%. Anything over that 70% line is widely seen as the sign of a really healthy, booming market. And get this, it's not a one-time thing. The market has been this hot, above that 70% mark, for 4 years in a row now. That tells you that buyer demand has been consistently strong for a long time. And it's not just the smaller investment units that are flying off the shelves. Check this out. At the very top end of the market, sales of so-called oku mansions, we're talking condos over 100 million yen, they surged by over 20%. That shows there is a ton of confidence and money flowing into the high-end market too. So the market seems really robust. But what's coming around the corner? Let's take a look at the inventory levels and what the official forecast is for 2026. Now, here's an interesting little twist. Even with all those sales, the number of unsold units actually went up at the end of the year. And that's the first time that's happened in 4 years. It kind of suggests that the massive supply of new units is finally starting to catch up with demand, which might lead to a more balanced market. And looking ahead, the official forecast seems to agree. They're projecting about 16,000 new units for 2026. That's a little bit down from this year's big surge, but historically speaking, that's still a very, very solid number. So what are the key things to keep an eye on? Well, first, we'll see if the market settles down after this year's supply shock. Second, the report mentions we should watch for any new rules that might target speculative buying. And finally, we have to see if this huge split between what's happening with family homes versus investment properties continues to be the main story. And all of this leaves us with one last really important question. We saw how the average price was just a statistical illusion, skewed by all those small units. But beneath that number, the reality is that the cost of a home big enough for a family is still climbing, and fast. So, as this trend continues, you have to wonder, what will it really take for a family to afford a home in the Kinki region in the near future? Thank you for watching the Japanese Economic Review. We look forward to having you with us again.